Hi and welcome to StockInvest.us podcast for week 5. And what a week we have ahead of us. There will be big earning reports coming out from companies like Google, GM, Starbucks, PayPal, AMD. We will have Facebook, we will have Snap, Amazon, Ford, just to mention a few. This is really the week of earning reports, and that will for sure affect the market. Then there is the conflict between Ukraine and Russia. Rumors has it that Russia is just waiting for the ground to be frozen before they finally will go in to Ukraine. But this is just a rumor, you never know. At the same time, we know that the United States says they will not intervene directly in Ukraine if Russia goes in, and even NATO said the same thing. Is this a go signal for Russia? Hard to say, but you should keep it on your radar. And last week I told you I believed Microsoft will end the week at 310. I'm happy to report it ended at 308.26. And Tesla, which I said was, in my opinion, going to fall down below 880, had a target for 880, fell even a little bit more. But now it might just be that buying opportunity in Tesla, which I told about in the last few podcasts. And looking at charts all over, there might just be that this week actually will be the very, very good pickup week. We will look at the trading tips that we had last week. Maybe you remember I told you that Starbucks was one of them I was going to buy. And how did that go? Well, we will know shortly. First, as usual, we will start with the markets. What can we expect for the week ahead of us? What are the things to look out for? I already mentioned some of them, but you will have the rest of it just after the disclaimer. We have to do the disclaimer, but then we will be back with the markets.
Welcome to StockInvest.us podcast. We remind you that trading involves a high risk of losing money, and that you should speak with a financial advisor before buying or selling any securities. You should not base your investment decision upon StockInvest.us. By using the information provided, you agree and are held liable for your own investment decisions.
In last week's podcast, the title was A Week of Surprises, and it was really a week of surprises. Monday started really terrible, but ended in green, and the rest of the week was very volatile. At the end of the week, Nasdaq didn't move hardly at all. It started the week at 13,769 points, ending at 13,770 points. Just 1 point change for Nasdaq. Dow Jones did a little bit better, ending up 1.34%, or 460 points, closing the week at 34,725 points. Right now, Nasdaq is below 14,000. Dow Jones is below 35,000, and we know these are resistance levels. So what will the week be? What can we expect? Will they be able to break through the resistance levels? And what are the arguments for doing so? As usual, we will do this in 2 steps. We will just look at some fundamental things, then we will look at the chart, and I will conclude what I think will happen. One of the things that we usually talk about is the amount of buy and sell signals. At StockInvest.us, we now analyze more than 35,000 tickers. We just added Oslo Stock Exchange, Bombay Stock Exchange. So if you're into any of these stock exchanges, well, now you will find the analysis for the companies listed there as well. Doing all these stocks, we give each of them a signal, a analysis, which either turns out then to be a buy, hold, or sell. And based on this, we can tell something about how many buy signals is across the world and in these different markets. The theory is very, very simple. If there is too many buy signals, you can expect markets to take a break and fall simply because it's too optimistic. There will not be enough money to continue to flow into the market. And in the opposite direction, if there is a lot of sell signals, you can expect the same thing, that the market will turn up. It's the same thing with the relative strength index, etc. It's somewhat what we call momentum indexes. And right now there is 16% buy signals across all the tickers that we analyzed. That's just the same as last week. But looking at Nasdaq and New York, we can see that there is an increase in buy signals. So our system is finding more and more tickers at Nasdaq positive, and the same thing with New York Stock Exchange. Last week, Nasdaq had 6% buy signal. As I told you, that's extremely low. I cannot remember have seen that low. It increased during the week to 8, and I see the systems every day, and I can tell you a lot more is coming. If we just have one green day, there will be issued much more buy signals. New York Stock Exchange, 14% buy signals. And if we go over to Asia, we can see that Tokyo is more or less the same like last week, 13% buy signals, while China has fallen down to 10. What does this tell us? Well, to me, it looks like it might be that the bottom was last week short term. At the same time, there is always this risk when things are as low as they are. It means that the market is volatile and things can flip very fast to even worse. So this is the scenario, the same scenario like last week. It can be a week, very volatile week, but there are signs, positive signs. This is the first week that the buy signals, for instance, for Nasdaq is going up in more than 5 weeks. It finally is turning upwards. We will see. Other big item tickets to follow. I mentioned over and over again, keep an eye on the treasury yield, because if the treasury yield goes up, the market goes down. This has to do with inflation, and we know that even more bad inflation numbers came on Friday. But right now, market has accepted most of it. It has to be, in my opinion, much, much worse things in terms of inflation numbers to scare the market. We have got used to these 5%, 7%. We already know for many weeks that we are at 40 years high when it comes to inflation. And as I said before, in my opinion, this will just get much worse before it gets better. But it seems to me that now markets have understood it, and even the expectations of increase in interest rates, Fed is hawkish, seems to be accumulated in to the market price as is. Last week, treasury yield increase a little bit, is standing at 178. I saw it at 188 during the week, but it fell a little bit back, and it's 178 as is. I think it just slowly will continue to rise, but not in a too big pace. The other thing that we follow is, of course, gold. Gold usually gives us an idea about where money is flowing. And gold actually fell by $50 last week, down to 1,790. And I find that actually a good thing for the stock markets. And I think that we will see more money flow back into stock market as such. Oil still high, $87, up $2 for last week. We know that oil, of course, will have anything to do with energy prices. It's bad for airline companies, it's bad for cruise lines companies, it's bad for everyone who uses oil as energy source. At the other side, it's good for oil companies, of course, with high oil prices. For the consumer in general, it's a bad thing, so staying high is not good. Overall, these signals is somewhat neutral, and we have then a situation where the buy and sell signals, they indicate a slight increase, slight more positive, while these other numbers then is the same thing. So what else can move the market this week? Well, as I said in the introduction, there will be a lot of earning reports coming, and this can push the market. They always do in some way or the other, especially when there is big companies. So what can we expect? I have not dug into the earning reports for each of the companies, looking at their expectations. You can do this yourself. Go to StockInvest.us, type in the ticker. For instance, this week will be Google, and you will see there is an earning warning about the earning release coming, and you can see a little bit about the previous data and a little bit about the future expectations. Will they be met? Hard to say. So far, it's looking good. Microsoft and Apple was last week, and that was not bad at all. It starts with some production manufacturer index numbers today, but no huge expectations for these. tomorrow, after markets open, there will be earning reports. After market, there will be earning reports for Google, GM, Starbucks, PayPal, and AMD. And I am pretty sure that these will set the tone for the opening on Wednesday. After Wednesday's trade, Facebook will release their numbers, or Meta. And on Thursday, before markets open, you will have Amazon and Ford. And I think that we will see some strong numbers. But the big investors, they will focus on what the future can hold. We saw this in Netflix. Netflix had okay result, but subscriptions got down, and that scared the hell out of the investors, making Netflix plunge 20%. On Friday, there will be some more job-related numbers. Average of all of this is there is nothing very, very special, and having a slight positive sentiment at all. I think that these things can make ground for a somewhat okay week. But what do the chart tell? What do the technical things tell? At StockInvest, you can find the chart by typing NASDAQ or the ticker Exig. And what you will see is something I mentioned last week, that markets are totally oversold. And one thing that I really like is if things is going down, the fall starts to become more rapid and the volume increases at the same time. It's called sell-off. Looking at Nasdaq, we can tell that the volume at Nasdaq rose quite much as Nasdaq plunged down under 14,000 points. And I think that signals a slight sell-off, which as I said, really like. It gives room for the bounce up. And that brings me to more than just this week, because if we look in the longer picture, it sadly is, as I've been saying in a few podcasts, things have changed from being in the rising trends, then moving horizontally, they now are in falling trends, and these will be hard to break. So there is nothing in the charts indicating that we are heading for like 3 months of pure joy. I am talking a week ahead, and in my opinion, it looks like from a chart basis that we can have 1-2 okay weeks. And that is exactly what we want. But for the week ahead of us, we can say that Nasdaq found a pivot bottom at 13,352 points. And right now it's facing some resistance where it is. The next resistance level is of course around 14,000, then 14,500, and finally at 15,000 there is really a lot of resistance. And I don't see, unless there is something very, very special happening, could be some geopolitical things. It has for sure to be something very big to be able to push Nasdaq above 15,000 anytime soon. You should never say never. These things have happened before. But right now there is a sell signals from the long-term moving average. On Friday was given a buy signals from the short-term moving average. And as I just said, the relative strength index is very low. It was 15 just 2 weeks ago. And now it is still oversold at 30 going up. This gives me the idea that we will see a short-term reaction up. At the same time, I have to warn you because this has also happened before, that when market is scared, things are very low. It can go even faster down. It just needs the proper thing to ignite it. So what will be the ignition if things go bad? Well, to be honest, I don't think, unless there is something I have not managed to catch up, I don't think the quarter results will be that one thing. I think the quarter results actually will come in at expectations, maybe even above expectations. So it is this geopolitical thing that I just mentioned about the Ukraine conflict or something else. We know that COVID is slowly fading away, that Omicron virus is very mild, and more countries are open up. So what if there will be a mutation? Of course, this can scare the market, but again, I don't see that. For me, the most likely thing that can really take a toll on the market is if we see anything happen in that Ukraine conflict. So that is one thing I for sure will keep on my radar. Try to read a little bit up, see what is moving along the lines. Because if not, by all means, by all technical chart means we should see a rebound upwards, minimum to 14,000, most likely close even to 15,000. That will be the total natural reaction. And then after that, it should be a slowdown where it falls back. And the one thing that you want is, of course, that the next bottom is higher than the previous, because then we can be talking about things starting to change again. But that will not happen as I see it. So for the week ahead of us, I believe we will see that Nasdaq will move upwards from the bottom. Hard to say, will it turn around 14,200, 14,500? My opinion, it should be close to 14,500. Then bounce a little bit back, and by the end of the week, I see some greens, but not very much green. In my guess, it will be somewhere around 14,300 points that we will end the Friday. But also with very high chance that the following week will be green. So this will be my tip for the week, that we are heading for a green week. It will be a very good week for selected stocks. And that's exactly what we will do now. We will look at what stocks may go up in the week ahead of us, do some of the manual analysis of Apple and Tesla, and we will even look at the crypto and just talk a little bit about what stocks could be the stocks to buy this week. You will have the trading tips. That's the section coming up. In this week's analysis, we will see more or less the same in all of the stocks. They are oversold and give the idea that there will be a reaction up. Starting with Apple. Well, Apple had the reaction last week, a strong week indeed for Apple, moving up. It was down at $159 and moved up all the way to $170. Right now, it's facing the resistance from $170 to $175, and I do think, based on the very high volume last week, that Apple may just turn around $175. Could be that it will do already today. Then it should take a natural reaction back and fall back to 165, where it again may turn and push upwards. There is a buy signal from the short-term moving average. There is a sell signal from the long-term moving average. Relative strength index was, as I said last week, extremely oversold, but is now back at 50 due to the high rise over the last few days last week. Volume being as high as it is following the stock is always a good sign, but at the same time it is at a very, very high. So I think some of the potential is taking out. So the bet for the week is that Apple may continue to push upwards to 175 and then turn downwards. The very high, which I see as the most likely high at the very best scenario, will be 180. But I don't see that as a very likely scenario. It could happen, of course. If it happens, that will be a very good thing, because then 175 will be a good support level along with 170. So giving a better forecast for next week and the weeks to follow. Final evaluation will be that Apple will push upwards. In my opinion, it will turn somewhere around 175, then fall back to 170 and could be 165 low, but ending the week somewhere close where it is today. So the target for Apple this week will be 170, ending Friday's price. And that brings us straight to Microsoft. Last week I told you I thought Microsoft would end the week at $310. Ending at $308.26 was more or less spot on. And if we look at the chart, we see many of the same things that we do in Apple. It had the bounce up last week, the obvious one, but there is still more to go. In my opinion, it could push upwards to, let's say, 320 and then have a natural reaction back downwards to somewhere around 300, 305 and push a little upwards. Relative strength index is 46, moving up. It's not overbought by any means. Has to go to 75 to get overbought. And for a long time back in November, Microsoft were moving highly up in overbought, just pushing higher week after week. We are not in that scenario now, but there is room for more upside. Has a sell signal from the long-term moving average, a buy signal from the short-term moving average. This just indicates what I said even in the previous section, that this week should by all means somewhat okay, and even maybe next week. Apple is in a rising trend while Microsoft is in a falling trend, and we will see how these things develop. Microsoft had a very nice sell-off situation when it fell down to 288. The volume increased heavily, and that's exactly what you want to see. It gives an idea that it might be a short-term bottom. But only when the stock reacts back, we will see if the next bottom is higher than 288. That will define if there is a chance in the 1 to 3 month scenario. For the week, the very high I see is 320, the very low I see is 298. I think that Microsoft will end the week somewhere around 310. So I will keep that target also for Microsoft this week. And that brings us to Tesla. And Tesla, I said last week, I believe Tesla will fall below 880. Have a rebounds up. I put 880 at target. Tesla fell harder than that, fell to 846. And if you have been following me long, you know that I did a trade in Tesla from 560 all the way up to 1200. At 1200, I said I thought the stock would react down to 880. And at 880, I would consider to get in again. Right now, Tesla fall below the support at 880, broke down to 800. That's a typical reaction when support is broken. It will fall to the next level, which was just above 800. Low on relative strength index, only 30, has this typical, I would say, sell-off pattern as well, but with heavy resistance around 930 to 950, later at $1,000. There is nothing looking like there will be a magical upturn, but there is, in my opinion, a swing trade to be made upwards to 950. Looking at the chart, this is not the place where I will go all in. But as I said, I think there should be a short-term upturn in Tesla. In my opinion, it will be upwards to $1,000. That's $150. So it's a quite nice rise, on 15% possible upside with the first obstacle just above $900 will be the first test. If that happens, that it breaks through 930ish, 950ish, goes to 1,000. The same level will be support level, 950 will be support level, and that can give us an idea about the more longer term. But as is, I'm not ready to go fully in. I don't see that very, very perfect chart picture for longer than just a swing trade in the next few days. Sell signal, long-term moving average, sell signal, short-term moving average is in a falling trend. Everything indicates that there still might be more downside. We need another pivot bottom higher than the previous before we can start talking about a more bigger forthcoming change. But for sure, we are at levels. No, I will follow Tesla very closely to see if I can find that sweet spot and again do an amazing trade in Tesla. And just this is it. It wasn't, maybe it was last podcast or the podcast before, I cannot actually remember. I told you there was a head and shoulder formation in Tesla. Sweep back to a last week's podcast or a podcast before. You will just hear me say that it was a head and shoulder formation with the indication that Tesla should fall. The neckline, which we base our analysis on, was at 1,050. The head was at 1,200, so it should fall 150 points from 1,050. And that was minimum $900. That actually happened. It followed this formation perfectly. If you love technical analysis like I do, you can check it out for yourself. If not, Google head and shoulder formation and you will learn another amazing thing to watch out for. There is a lot of formations like rectangle, inverted head and shoulder triangles, etc. I love head and shoulder. It's one of my favorites, and this time it was spot on. Normally we see a reaction when the head and shoulder formation is broken. I told you the neckline, we call it the neckline, was just above $1,000. When it's breaking down, it falls the minimum, the amount it's supposed to fall. Then it has a reaction back up to the neckline. So following that theory, we should see Tesla just around $1,000 again. Fits very well with the rest of the things I said about support resistance. Resistance at 930, later at 1,000, and it may turn about 1,000. So everything points into the same direction. And that brings us quickly to Bitcoin. We'll do Bitcoin, we'll do Dogecoin. Then I will give you the trading tips of the week. I have a few stocks which I think will do very well. And we will see. And as you just heard, I think there is possible to do a swing trade in Tesla on the current levels. Some risk, of course, like in everything, there is a risk. And we know that Tesla is very volatile, moves very fast up and down. So you should be careful and be prepared that it can go the other way. But in my opinion, the risk reward right now is 60-40. It's quite okay as I see it for a short-term swing, not a long-term swing. That brings us to Bitcoin. And last week I said I thought Bitcoin would react up and push upwards to 40,000. Never managed to do that. It ended at 37,000, currently trading at 37,000. Is in a very tight falling trend. And sad to see, let the trend be your friend. Well, the trend tells that it should continue downwards. And as I said, it's now facing so much resistance above that the break up will be slow. Has some support where it is today, all the way down to 35,000. Is 35,000 is broken down, it will just fall straight to 30,000. What we need to see is the crypto, Bitcoin, break above 40,000 and do it on some volume, and then we will have a trend break and we will have a situational change. Right now, sadly, sorry to say, everything is working against us in the crypto. Huge resistance just above 40,000, all the way up to 45. Then from 45 to 50, from 50 to 55, it can go very fast, but then it's a lot of resistance above 55. We have not found the bottom yet. We need a pivot bottom higher than the previous. The previous bottom was 35,000. If we are able to see a new bottom forming around 37,000 as it push upwards to 40, or a double bottom at 35, we can finally start to be more positive. But for the week as such, I will remain positive with the idea that we will move upwards to 40,000 for Bitcoin. And that brings us to Dogecoin. The reason I mentioned Dogecoin is because Dogecoin more or less represent these shit coins, these very, very small coins. And it's somewhat the same as we see in Bitcoin. Now it's oversold on the relative scene. They should push upwards. My last trade was at 20. I had a few successful trades before that. Then I got in again at 20 with the idea that it will turn. Has not turned yet. I'm in quite a nice red loss on Dogecoin, and I don't see any real chance to get the money back very soon. Of course, this is one crypto that moves very fast. If Elon says something or someone else major plays something, we can have Dogecoin easily back at 20. But I'm prepared to sit a little bit more because it was just a lotto play and I made so much money from 20 to 40. So, of course, I can tolerate a loss. Will I invest more at current levels? Well, you should not double up. It's normally not a good chance. I will just sit and see if I can get back to the 20s, do another evaluation. I think that crypto is here to stay. How much we have to bleed this time, very hard to say. I had been in and out of Bitcoin. I was very right in my crypto analysis for a very long time, but this last huge fall taken me by a little surprise. It's not been turning exactly where I thought it would turn, but that's just the life of it. For the week as such, I think at best case scenario we will see dogecoin up at 18. More likely it will be around 16, 17. So having a target of 20 is a little bit too optimistic. Again, I will have to reduce my target and I will keep 17. It was 18 last week. I will keep 17 cents. At StockInvest, we analyze all the crypto, so you can go and see what our system thinks. And if we, for instance, look at Bitcoin, our system said on January 1st, sell Bitcoin, and since then it lost 11%. You can even see the previous analysis that we had, and mainly actually since long before Christmas it's been either sell or hold, and it's been going down every way. So technical analysis works even for crypto. And that brings us to the very, very final part, the trading tips. Analyses are okay, but most of you are here to listen to the trading tips. So what are the trading tips for the week? Every week I give you trading tips, that stocks that I buy, and I actually buy them after telling you what I think would do good. I buy them, I try to buy them as low as I can during the opening of the trading. Last week I told you I thought StarBUX had potential. I got in at StarBUX at 95.42. Right now trading at 97.21, up some 2%, and still active trade because I think it's more to gain. Netflix from the week before, from week 3, is still open. Just to give a quick recap of that, I bought Netflix because usually it goes up after earnings release. I was too early. I did a mistake. And Netflix, I was supposed to buy Netflix at the end of the release day. I bought it before the release. I didn't check my own analysis properly. I just bought it, and Netflix posted the results. The subscription numbers were not as supposed, and Netflix opened under my stop loss. My stop loss was never triggered because the trigger point was too high. So I had to take a huge loss in Netflix over the first day, trading day after. And the Netflix looks okay to me. And I still think it is, if you don't have Netflix, I think there is money to be made in Netflix. And I think it was on Friday it was released that some of the major employees in Netflix have used this period to buy a lot of new shares, believing that Netflix should go up. Before that, we had Doyle in week 2. I told you this was a more long-term trade. It's still open. We bought it at 12.72, or I bought it at 12.72. It's now 13.49, up 5.8%. If you're new listeners, I can just tell you that before this, we had a huge amount of good trades. I had in total 7 bad trades, all of them cut around 3-4% loss, while the profits for the bigger ones was 14 to all the way up to some 22% in AMC. So we are, or I am in a very good position still with the trades, but I need to get some of my investment in Netflix back. And I think that might just be this week where we'll see it move back upwards. Maybe not all the way to 511, but enough maybe to close the loss. So for the week ahead was, what are the stocks which I think has huge potential? And then again, I have to tell you a little bit about previous podcast, because over all these podcasts, I've been telling you how I've reduced my total exposure in the market because I thought market were too high, expecting a reaction down. Nasdaq fell from 16,000. It's now below 14,000. For me, indicates some short-term swing. So actually I'm increasing a little bit again my exposure in the market very shortly, but then I will get out because I think there is a bigger swing opportunity as is. So this week I will actually go into 3 new trades. I will keep Netflix open, Starbucks is open, Doyle is open. And I think there is money to be in NVDA, AMD, and as I just mentioned, Tesla. I will open positions in three stocks today. Since I have so many positions open, I will follow them closely. I will add necessary stop losses to NVIDIA, AMD, and Tesla. Hope I will get in at a very good price today. Very hard to say. I will just have to see. I'll try to get in as low as I can with the expectation that during the week I will see some greens in them. AMD is going to push their earnings report, so it is a little sketchy. We will see. All of them are, in my opinion, bounce up candidates. So last week, Starbucks went in plus, Doyle went in even more plus, Netflix was more or less unchanged during the week. So the total was a slight profit. For last week, I have higher hopes for this week. So recap on the trading tips for this week. I believe, as I said, I have Netflix open. I think it's a good buying opportunity for a short-term swing. So that is the trading tips for the week. I think Doyle still has a lot more upside. It's up almost 6% since I bought it, but I think there is more to go. So that is also a trading tips. And Starbucks for sure, I think there is way much more upside. Even Starbucks will have their earnings released soon. So if you're very smart, you will wait until the earnings are out, or at least see how the stock moved before the earnings, because as happened with Netflix, can happen with Starbucks. You have to be very careful how you play your game. In addition, opening NVIDIA, AMD, and Tesla. That will be it. I'll try to end this podcast. It was a hard podcast to make because there is building in this, there is construction in this building, and it was interrupting me a lot during this podcast. So I had to do a lot of retake, stop, cut, try to put. So hopefully you'll not judge me too hard if there was not a very good float in the podcast. But we have to try to end with a tip. And one question I often get is, why don't you do more put and calls? Well, most of you do the following mistakes. You get too greedy when it's green. Even I still do after so many years that same thing. You want more, so you sit too long, and you don't get out the profit of a stock when it turns. When it turns, you do that other mistake. You don't sell because you think it might turn. You get afraid, and you just sit until losses become more or less unbearable. Then you sell just to see the stock bounce up. This is the most common way of doing it. And if you're not a skilled trader and you jump on puts and calls, of course, you have a huge upside, but there is also a huge downside. It just increases your risk. So until you have a very good strategy in the way that you trade, try not to use borrowed money. Most of the stockbrokers today offer leverages. You can put in 10%, 12%. Some stocks, depending on the risk, you have to put 80% of your own capital and they will borrow you the rest. When markets go down, they will start to say that, well, now you're getting close to your margin call. You have to add more money to your trading account. Otherwise, it will be sold. And that brings us usually into more problems because nobody knows for sure exactly where is the bottom. It may very well be that the bottom was in the markets was 2 weeks ago, that from this point on, it will get back to very nice. I would not even be surprised if Nasdaq goes up to 20,000. I've seen this happen before. You cannot really tell, but everything indicates that we are on a down roll as is, and that we are just in a short temporary reaction up. But you never know, they might push more money into the market, pushing stocks up. The conflict in Ukraine may fade away and things might just look very bright with inflation numbers going down and we are back on track again. But in this turmoil, you have to be very strategic in the way that you trade. And that brings me to the actual tip of the week. Try to build your trading strategy. Try to see what is your strengths. When are you doing the good trades? There are a few tips of doing this. And actually, we are building a system right now at StockInvest.us that will analyze your actions and try to help you on the way. But stay away from the most high-risk stocks. It's such an attention to go in on these penny stocks because they swing so fast. You can get 30% in just 5 minutes, 10 minutes, but usually that's where you lose your money. So good strategy is try at least to make a certain decision about how much will you put in high risk, medium and low risk stocks. I suggest keep at any given time 70% or more in medium or low risk stocks, because when things go down, they doesn't go as fast as they do in the high risk stocks, because they can go they can go 90% down in just a short period of time. We've seen this. We saw this in Exigam, was an okay trade at 9.50s, now traded at $3. Go so quickly, even worse for these penny stocks, which is traded under $1. So stay with your main portion of your trades in less risky stocks. So that's one very good advice. The other very good advice is try to learn how to read charts, because your brain is a brilliant thing. It's evolved by nature to see risk, to recognize patterns, to understand and prepare you. And if you look at chart, eventually you will start to see some patterns, and this will help you. I just told you about the head and shoulder formation. There is lots and lots of pattern, but that visual thing that your brain actually sees stock is trending downwards, trading downwards. Why in God's name would you buy it unless you have a super specific reason? Could be that it's overbought. Right now I'm going into NVDA, AMD, Tesla in the precipitation that it will bounce up using something called a bounce up, that is a short term. But it's not like I think they will do good for weeks and weeks. I am just looking for that short period. So create your strategy, and as you create your strategy, try to read up about different things. Build up a nice strategy and be patient. Because at the end of this fall, there will be an amazing buying opportunity, an amazing investment opportunity. The whole point is trying not to lose all your capital on the way down. Remain floating, accept some losses, but make the profits higher than the losses. Reduce your loss, increase your gains, as we always say in StockInvest. And that was the podcast for week 5. Next will be week 6. Until then, have a splendid week. Hopefully bank some greens, and we will speak in just a week. Bye.